Good morning. Welcome to Stock Market Today. It's Wednesday, March 6, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _CMT. If you're on Stock Twits, I'm there as well. Under the same handle, that's at Dan Russo _CMT. Stock Market Today, brought to you today and every day by Chaikin Analytics. If you head over to chaikinanalytics.com/today, you can sign up for a free email. Follow along with this show. You'll get daily stock ideas for you to consider delivered to your inbox every market morning before the market opens. U.S. equities were slightly lower rather, in Tuesday's trading, with the Russell 2000 leading to the downside once again. Industrials, financials, and energy were the biggest underperformers. Communication services, REITs, and consumer discretionary finished higher. Treasuries were mixed. Dollar was stronger against the euro and yen. Gold finished down 20 basis points. WTI crude closed down 0.1%. That's 10 basis points. Outperformers again, comm services, REITs, discretionary, throw in staples and healthcare. Both of those finished lower, but outperformed the market. Your underperformers, industrials, the financials, energy, tech, materials, and utilities. As we get to the desk this morning, S&P futures are down 10 basis points after finishing slightly lower yesterday. Asian equities were mixed overnight, with China leading, up over 1.5%. Japan lagged. European markets are mixed this morning. Treasuries are stronger, but the 10-year yield remains above 2.7%. Dollar is flat versus the yen and euro. Gold up 10 basis points. WTI crude down 1% following some inventory data last night. As we dive right into the market, what else can we say? We are stuck in the zone. That is the resistance zone in the 2800 to 2820 area. Support 2725, 2750. Then down below at 2,700. RSI still near overbought levels. Chaikin money flow is bullish. But just to give you an idea of the significance of this level, over the past year, it's been tested 1, 2, 3, 4, 5, and now 6 times. That will tell you the more times a level is tested, the more significance the market is giving to that level. What that means is if we fail from there, it's meaningful. It's likely to act as strong resistance, or at least we should go sideways, which we're doing over the past week and a half or so. However, the opposite argument is if we break through that level that has been such strong resistance, that is equally, if not more significant. So as we think about how we're going to strategize, we continue to want to use pullbacks to support, to add bullish and very bullish stocks in leading industry groups, which have become oversold. Or if we do get that breakout confirmed by momentum through 2820, we want to buy bullish and very bullish stocks in leading industry groups when they become oversold. That's the strategy. That's the playbook. Still a bit of a grind here in this level, and you can see just how significant that level has become. Your market in a minute now, what I'm writing about in my note to Chaikin Analytics clients today. Stocks continue to consolidate below resistance, we just talked about. But based on our proprietary overbought, oversold indicators, SPY and IWM are near oversold levels. Sentiment remains fairly steady this week. Not much to really talk about there. We are going to take a look at Pharma, as that's likely to continue to lag the market. Futures, as I said, do point to a lower open here this morning, but just slightly so. Taking a look at the power bars now. Major indices, Dow 7 of 4, bulls to bears. S&P 500, 136 bulls, 62 bears. NASDAQ, 28 bullish or very bullish stocks, 15 bearish or very bearish stocks. Small caps were your underperformer yesterday, down 47 basis points against the S&P 500, down 12 basis points, 553 bulls, 322 bears. Bonds, uptick. Cent yields lower, but as I said, 10-year yield still remains above 2.7% for now. According to the Chaikin Power Bar, large cap stocks and small cap stocks are bullish. Major indexes across the board are mixed. Our stock of the day now is Perficient. Ticker symbol is PRFT. Closed at 28.30 yesterday, down 1.84%. Part of this group of strong software stocks that are seeing some profit taking. Perficient has a very bullish Chaikin Power Gauge rating due to very attractive financial metrics, very positive expert activity, and strong technicals. That's the price volume activity. So if we look here, very bullish stock, strong trend, strong industry group. Ribbon at the bottom of the screen tells us where we are and where we've been. Now, we were a big fan of this stock through most of 2018 as it was very bullish and clearly outperforming. Became an underperformer as the market sold off, but now we're seeing, this is what we refer to as a personality change. What does that mean? 3 of our key indicators shift from bearish to bullish. First, or from neutral to bullish. First, the power gauge rating turned bullish and is now very bullish in February. Market and model get into agreement. Stock goes from an underperformer to an outperformer. And then persistently bearish money flow becomes persistently bullish money flow. Proficient is a stock that is undergoing what we like to call a personality change. It's closer to oversold than it is to overbought, above the rising long-term trend line. I think this is an interesting name here. As long as Proficient is above the support level at $26, I think it looks compelling as a candidate to be in the portfolio. Above $26, Proficient looks good. Undergoing a personality change, very bullish stock, strong trend, strong industry group. Think about adding this one if you don't already own it. Sector tracker now. Looking at the movement of the major sectors over the last 5 days, communications moves to the top of the list. And some of the big names that were underperformers within that group are starting to perk their heads up. And I'm talking about names like Facebook. And I'm talking about names like Google. These are names that were moved into this communications sector when it was reconstituted back in September. And they are giving it a little offensive firepower here. Communications, energy. Energy's been strong. There's no doubt about it. I don't like the group, but it's been strong. Utilities continue to lead. Real estate moving towards the top of the list here. Some of the yield plays coming into play. A little bit of a defensive positioning well as the market churns here under that key level. Some earnings helping the discretionary group. Bottom of the list, materials. We've been watching materials. We've been noticing the relative downside momentum is waning, so we're going to wait for the trend to actually turn, but we are watching it. Continues to be an underperformer. However, industrials, healthcare, tech, financials, and staples all down over the last 5 days. Tech, a large part of that having to do with the software names that have given back some of the big gains since the December lows. And remember, healthcare is a group that we've been watching because it was a big leader throughout 2018, and that leadership is slowly transitioning to underperformance. So we're keeping an eye on that group. And we're going to take a look at Pharma a little bit later in the show. Industry focus, oil and gas, equipment and services. No two ways about this one. It has been bad. We've been bearish on it. Over the past 6 months, oil and gas, equipment services subsector has underperformed the S&P 500 by nearly 21%. Power bar ratio, which measures future potential, is very weak with more bearish than bullish stocks. It's currently ranked number 20 of 21 subsectors. The 21st subsector is actually the oil and gas E&P companies. Some of the indicative names here: Core Labs, CLB, Halliburton, HAL, and Ensco, ESV, all with very bearish Chaikin power gauge ratings. And in all, there are 25 stocks with bearish or very bearish Chaikin power gauge ratings, and only 3 with bullish or very bullish Chaikin power gauge ratings. And let's take a look at Halliburton here today. Very bearish stock, weak trend, weak industry. Type of name we know we want to avoid. This stock, I'm not using it because I think it looks compelling to enter a position here now. I'm going to use this stock today as an example of what we refer to as our classic bears. Classic bears are bearish and very bearish stocks that are persistently underperforming the market, where money flow is persistently bearish and it is trending below a declining long-term trend line. You can see that this one certainly fits the bill. Very bearish, has been so for a while. Underperforming the market for quite some time. Persistent bearish money flow. A little bit of a pop here in the beginning of the year with everything else, but now bearish once again. Long-term trend lines declining. Stock predominantly staying below that declining long-term trend line. This is a Chaikin classic bear. This is the type of name you want to avoid. This is not the type of name where you want to go bottom fishing. You'll have plenty of time to buy this stock if and when it does turn. The weight of the evidence doesn't support being long this stock. The weight of the evidence supports continuing to avoid Halliburton, and a lot of other names in the services group within energy have similar dynamics. Yesterday's S&P 500 movers on the gainer side of the board: Kohl's up on earnings. Willis Towers Watson up 5.2% as potentially they are being bought by Aon, which was down 7.9%. So M&A activity there accounting for these two names. Target up 4.5% on earnings. Harley-Davidson bought a small company that makes electric-powered two-wheel vehicles. Markets seem to like that, up 3.36%. And Tyson TSN caught a positive initiation, which sent that stock higher by 2.75% on the day. Loser side of the board, we already touched on Aon. Dish, little profit taking as that stock had rallied the previous day. Align, ALGN, stock sold off following an arbitration outcome. GE comes out and says that they are going to have negative free cash flow for 2019. Market didn't like that. Stock down nearly 5%. And DaVita, this is a kidney dialysis company, and the dialysis companies coming under pressure as CMS is talking about changing some payment options, which would negatively impact dialysis companies. That stock is down 4.22% yesterday. Our earnings update now. Tuesday surprises, Ross Stores beat by 6 cents. Target met its estimates. We already talked about that one. It did trade higher. GNC missed by 15 cents. Before the bell today, we heard from Thor, THO. That stock is trading lower. Neutrally rated stocks that we're going to hear from: Brown-Forman, BFB, Dollar Tree, DLTR, as well as DCI. After the close, Casey's General Stores, CASY. Guidewire is an interesting name here. GWRE is a software and services is a software company. Software's been strong, and they predominantly sell into insurance companies. Insurance has been strong. Let's hear what Guidewire has to say. SCCO after the bell, along with WEX. All four of those names have neutral Chaikin power gauge ratings. Turning now to what we're talking about in our note today, doing a little bit of a midweek market update. We already looked at the S&P 500. We've talked about that. Let's look at the Qs here. Invesco QQQ Trust, our proxy for the NASDAQ, if you will, continues to show relative strength. Down at the bottom here, here's the Qs relative to the SPY. Broken the downtrend line and continuing to work higher. That's encouraging. That increases the odds that we're going to break out of this resistance zone that we're in between 172 and 177.5. Qs remain above their now rising 200-day moving average, and all the while, the RSI appears to be shifting into bullish ranges. Notice on the pullback here how it didn't get below 50. This is the dynamics we look for in our momentum indicator to give us either confirmation or divergence of the prevailing price trend. I think odds favor a breakout. Likely see some sideways activity in the near term, but odds favor a breakout here for the Qs. Look for relative strength to continue. That's a bullish indicator for the market in general. Small caps, let's take a look at those on an absolute and relative basis. Similar dynamic to the Qs as well as to the S&P 500. Stuck here in this resistance zone. And look at the importance of this zone again. 1, 2, 3, 4, 5, and now 6 times. Again, testing this resistance zone for the IWM. Rounding out of an overbought reading based on the RSI. Our shorter-term Chaikin overbought, oversold indicator is actually closer to oversold. So that's kind of interesting here. Notice here as well, IWM has broken a downtrend line relative to the S&P 500. A little bit of a stalling out action of late, but still kind of working its way higher from an intermediate-term perspective. Churning around the flat 200-day moving average. Expect the sideways activity to continue here, but ultimately I think that's a base building process. Remember what we said about the SPY, same goes here. The zone's been tested 6 times. If we do break through, that's likely to be very significant. Finally, we're looking at pharma stocks in our note today. XPH, the SPDR S&P Pharmaceuticals ETF. Pharma stocks are lagging. Remember we talked about healthcare starting to see its relative strength roll over. Look at XPH here. Below this resistance zone, failing at the 200-day moving average and beginning to turn lower after achieving an overbought condition. Somewhat encouraging to see the relative strength, the RSI, relative strength index, holding above 50, but I think this group is likely to consolidate and continue to move sideways, but the relative trend remains lower. Here it is against the SPY, continuing to break lower. Good opportunity to look within XPH, within the pharmaceuticals industry group, for names that have become very bearish and bearish names which have become overbought. I'm highlighting BioMarin, BMRN, in my note to Chaikin Analytics clients today. You could take a look at that one. So that's it for today. ChaikinAnalytics.com/today. Sign up for that email. I will see you back here tomorrow. Have a great day, everyone.